Systemic moves in gold, though, aren't a consequence of geopolitical fears unless the geopolitics gets really out of hand. Gold moves because people have a specific fear, which is to say the deterioration of the purchasing power of their savings instruments, which is different than gold. The performance of gold in this conflict was very interesting, and I think it has to do with the fact that gold did its job. One consequence, short-term consequence of this conflagration was a strength in the U.S. dollar. That strength in the U.S. dollar happened both because people were disintermediating out of other currencies, in particular dirham, but also because rising interest rates paradoxically made the U.S. dollar more attractive even during a war, and gold is quoted in U.S. dollar terms. Let's assume a gold price of $5,000. And let's assume median all-in sustaining costs of $2,000. So your operating expense is half your sales revenue, let's call it. And let's assume that the oil price, that oil is 30% of the OPEX of a gold mine. The OPEX goes up 30% of 30%. So your OPEX goes up 9%. But your stock valuation on Wall Street is based on a gold price assumption of $3,500. There is so much cushion in the denominator between the Wall Street assumption and the actual price that people are selling gold for, that the arithmetic is solidly farcical. Mm-hmm. You are talking about an 8 or 9% escalation in operating costs as opposed to a 20 or 25% undercalculation in the gold price. I like that arithmetic. Mm-hmm. I really do. People, I think, are using the oil price assumption as a psychological excuse to do what they wanted to do anyway. If the gold price had gone up as opposed to down, people wouldn't have the psychological need to find an excuse for it. They wouldn't have a psychological need not to buy because they'd have a psychological need to buy. Mm-hmm. The oil price became a concern to people because the asset class became cheaper. Mm-hmm. It's truly ironic the way people think. People struggle very hard to find an excuse to do something wrong.
Market behavior is often driven more by emotion than logic. When gold equities fall, investors look for reasons to stay out, citing costs or uncertainty. But these fears usually appear only during declines. This reveals a psychological bias. Instead of recognizing value, many avoid undervalued assets and follow the crowd. Ironically, weaker prices can signal stronger opportunities. If currency purchasing power continues to decline, gold's value is likely to rise over time. In that context, lower prices should attract attention, not fear. Short-term mispricing creates opportunity, and disciplined investors who think independently are the ones who benefit most.
Curious about investing in gold and silver, but feeling confused due to ongoing global uncertainties? This ebook is specially designed for new investors who feel unsure about investing in gold and silver trading. It breaks down strategies in a simple, practical way, helping you make informed decisions and invest in the right direction. Over 100 people have already taken the first step with this ebook, and today they're living proof that smart investing can change lives. Start investing fearlessly, wisely, and with a clear strategy. Hurry! Visit the link in the description to get your copy today.
That's merciful for me. There are a lot of people out there who I think are smarter than I, who pay more attention to me, but they seem to unilaterally disarm in a battle of wits by finding an excuse to do the wrong thing at the right time. I'm delighted to see the gold stocks weaker. If you believe, like I do, that gold will maintain its purchasing power while the dollar loses 75% of its purchasing power, you're pretty bullish about the nominal price of gold for the rest of the decade. And if you're bullish about the nominal price of gold, given that statistically the gold stocks haven't kept up with gold, from an investor's point of view, you would want to own more of something that had such a high probability of return. And if you wanted to add more, I would think that lower prices would be in your interest rather than higher prices. I certainly have found them to be in my interest. I also think, Trey, if we can beat this up a little more.
The mining sector is quietly shifting. Companies have focused on financial discipline and returning capital instead of expanding production, but this has led to declining output and emerging supply constraints. As a result, investor focus may move back toward growth. However, rebuilding production is slow, with mining projects often taking a decade or more. This delay is putting pressure on the industry, forcing companies to rethink how they replace reserves and sustain long-term output, making future supply increasingly critical.
That the paradigm around gold stocks will begin to change. The investment community right now is rewarding gold companies that are extremely cautious in their capital allocation, particularly rewarding companies where they think that there's an increase in distribution of assets to investors, very much like the oil market. Investor perceptions 2 or 3 years from now will be very different. They will look at production declines that are occurring at major gold mining companies as a consequence of lack of investment, and they will be asking companies, as they did in 2004 and 2005, to maintain production or to grow. There is no short-term way to do that. You have to do it in the mergers and acquisitions market. And I think we're going to have a surprisingly strong gold equity M&A market in the next 2 to 5 years. I think right now is the time that investors and speculators need to look at gold stocks, both based on their valuations, but also on their strategic importance to neighbors, and begin to construct, like our mutual friend John Hathaway is doing, portfolios around an M&A theme. Mm-hmm. Because that's going to be, I think, a really, really, really important theme in the next 2 to 5 years.
Do like, share, comment, and subscribe to this channel. Also, don't forget to hit the bell icon for more updates.